it should be the Ministry of Finance, the policymakers, to stop having these ambiguous provisions. And when you look at the law, when they amended it and tried to separate commercial premises from long lease, short lease, and then had some ambiguous thing called service apartments, they should have gone way beyond that and defined what the service apartments are.
Hello everyone, welcome to the Tax Up podcast. My name is Edwin Michael Ichiba. I'm very privileged to be your moderator this afternoon. I'm a lawyer and a tax consultant. I currently work with BDO East Africa, and I'm very privileged to host episode 1 of the Tax Up podcast. And joining me this afternoon is a very experienced and profound panel of distinguished practitioners and industry leaders. Firstly is Mr. Birungi Cephas, a very eminent practitioner. Mr. Birungi, you're very welcome to the Tax Up podcast.
Thank you, Edwin. I'm excited to be in the very first episode of the Tax Hub.
Thank you very much, Mr. Birungi. Mr. Birungi, listeners out there would like to know who is Mr. Birungi, whereas me, I may be knowing, but let's get to know who is Mr. Birungi.
Birungi Cephas is the managing partner of a law firm called Birungi Barata and Associates. We get involved so much in the tax arena. We have been there for more than 2 decades. And basically, that's who I am.
Thank you very much, Mr. Birungi. We're very honored to have you on episode 1 of the Tax Hub podcast. Ladies and gentlemen, the other practitioner we have this afternoon is Mrs. Vanessa Irene Bekeka Muneza. Mrs. Vanessa, you're very welcome to the Tax Hub podcast.
Thank you, Edwin, for having us here today.
Thank you very much, Vanessa. Vanessa, the viewers out there would like to know who is Vanessa, whereas I may be knowing who Vanessa is. It is just very important to get to know who is speaking to our dear viewers out there.
All right, as mentioned, Bekeka Vanessa Irene Muneza is my name. I'm an advocate and a tax practitioner with AF Mpanga Advocates. We have a tax department that has been growing gradually, and we have a lot of expertise in the tax space. Thank you for having me here today to join this discussion.
Thank you very much, Vanessa. Vanessa and Cephas are coming from very leading law firms in Uganda, so we're very honored to have you this afternoon. The other panelist that we're having is not a lawyer, but is equally as big as the lawyers over here. Mr. Mark Dutoit is coming in from Knight Frank. Mr. Mark, we're very, very honored to have you this afternoon with us.
Thank you very much. It's my honor to be here with such an esteemed panel. Who is Mark Dutoit? Well, Mark Dutoit is the head of retail for Knight Frank Uganda. Knight Frank is a property transactional and advisory firm. We've operated in Uganda for the last 25 years. This year is our 25th year commemoration. We do valuations, we do property management, we do letting and sales, and research and development in the property industry. We form part of the Knight Frank Group, which was established 127 years ago in the United Kingdom.
Thank you very much, Mark. We're very, very honored to have Knight Frank, a leading property and management consultancy firm in Uganda. Thank you very much. Ladies and gentlemen, the discussion this afternoon centers around 2 topical issues stemming from 2 decisions of one of the Tax Appeals Tribunal, the other of the High Court of Uganda. Very fundamental decisions because they impact not just we, the practitioners, but the industry players. They impact 2 notable sectors. And it was very, very imperative of us to have a candid discussion. And we're very honored to have the lawyers that represented the clients in these 2 matters. And it's very, very good to have a very extensive, very deliberate, and a very impactful discussion. So these 2 decisions will be broken down by our eminent panelists. And the very first decision is Sharad Karia versus Uganda Revenue Authority. That's a decision of the Tax Appeals Tribunal. Very, very groundbreaking decision because it touches on a sector that is very, very dear to very many of us. Yeah, but luckily enough, we have the team that is going to break down this for us and make us understand, appreciate, but also very importantly, they're going to make our discussion very simplified, and ultimately, we shall even be in position to generate reforms, policies, and give very, very practical and simplified recommendations for you out there, someone who's dealing in property, someone who's dealing in housing, the real estate Very, very fundamental decision. I'll bring it over to Mr. Birungi. Mr. Birungi, Sharad Karia, that's a decision that you argued before the Tax Appeals Tribunal. Just walk us through this decision. What were the details? What were the facts? Where was URA coming from for our viewers out there? Thank you.
Thank you, Edwin. You didn't also mention that this is a case I lost in the Tax Appeals Tribunal, unfortunately. But
It's a learning moment.
going back to the background, Sharad Karia is a property, represents a property which is on Baker Street, somewhere in Nakasero, Kampala, Uganda. The Uganda Revenue Authority issued assessments on this taxpayer on the grounds that the property comprised of service apartments. Sharad Karia was of the view that these were residential apartments and not service apartments. So the dispute was on the value-added tax. The point is that when they are merely residential apartments, not service apartments, value-added tax should not be charged on the tenants of those properties. URA's position was that VAT should have been charged on the tenants of these properties. It's important to understand that, of course, in constructing these properties and in the normal running of residential apartments, you may actually incur VAT. But this is VAT in respect of your tenants. So it needs to be understood from the outset. So Sharad Karia objected to the assessments on the ground that the income in question was derived from letting out immovable property for residential purposes and was thus VAT exempt. The URA confirmed its position, which is the objection decision, and maintained the tax. And then the Sharad Karia went to the Tax Appeals Tribunal to have this decision reviewed. The arguments of Sharad arise from the third schedule of the VAT Act. If you have been reading the old law before the recent revision of the law, it was second schedule, but now it is the third schedule, and it is paragraph 1F, which states that the VAT on supplies by way of sale, leasing, or letting of immovable property is an exempt supply. Supply by way of sale, leasing, or letting of immovable property is an exempt supply, except the key one here, the sale or letting of serviced apartments. Now, this is among others. Those which fall under the same provision, which are also part of the exception, are commercial premises, parking or storing of cars, letting of hotel or holiday accommodation, or letting for periods not exceeding 3 months. So whereas we are concentrating on letting of serviced apartments, it's important to see the context in which it is, the others which are exceptions. So the applicant, Sharad, argued the facts that this is the state in which our property is for you to understand that this is merely leasing of immovable property. We are letting out immovable property. The reason we think we are merely letting out immovable property, which is not service apartment, are the following reasons. That our tenants have long tenancies ranging between 1 year to 2 years. Our tenants are required to give notice when they are terminating their tenancies. Our tenants are required to pay a security deposit on or before renting the apartments. The tenants pay for their own utility bills. The tenants are required to reinstate the premises into the state they were in before they hand over those properties to the landlord. And the maintenance of the apartment is left to the tenants. So Sharad was of the view that if these conditions happen and we actually write tenancy agreements, then these are not service apartments. Those were the main reasons. But the URA in this case decided that in order for it to understand whether these were service apartments or not, it needed to read the law as it was, which I've just read for you, that it is letting out of immovable property. But when it read that, it said that in itself wouldn't be enough to describe or to give an indication of whether those were actually service apartments. And they said, okay, we'll go to the European Union 6 directive, which has something relevant on VAT. And they said, when we base ourselves on the European Union 6 directive, we find that the leasing of immovable property is normally a relatively passive activity, not generating any significant added value, and therefore providing no justification for imposing of VAT. They said that TAT stated that this argument does not apply where the leasing of immovable property involves an active exploitation of the immovable property. In other words, when they read the directive, it implied that when there is leasing or when there is a passive activity, then VAT should not apply. If we impute that there is more than passive activity, then we should say VAT should apply. I guess you are kind of confused by this because that very reasoning in itself sounds up and down, because what is active, what is inactive, where was the European Union coming from to decide what was passive or not, was not really inbuilt in this decision, but somehow that is where the landing they came into in order to move to where they did move. So they ruled that the terms of the tenancy agreement showed that the letting of the premises in question by the applicant to the various tenants were not a passive activity which generated no significant value addition. In other words, the putting in those apartments of items which we shall look at, they consider that to be more than passive. If I put in a cooker and leave it to you, if I put in a flat iron and leave it to you, I'm not being passive. I'm being actively involved in your business, and therefore value-added tax should apply. So it's as if they were saying value-added tax is actually a tax which is based on when you see the supply of an activity being active. And this is quite an alien concept to the whole value-added tax, but there it was. That's where they came from. So they also said, in the absence of a specific definition of the term service apartment, that whereas there is nothing clearly defining service apartment, that term is not ambiguous, because the applicant, Sharad, had argued that where a term is ambiguous in the law, it should be interpreted in favor of the taxpayer. So they were trying to fight to argue that, no, there is nothing ambiguous about this, much as we have looked in the Hansards of Parliament and not found anything to describe a service apartment, much as the law itself does not describe a service apartment, there's nothing ambiguous. And I believe that is very debatable. I'm very disagreeable with that understanding of what is ambiguous. Ambiguous means something subject to more than one meaning. And if you have to go to the European Union directives to find a meaning, I don't know what else can be more ambiguous than that. So anyway, they said it is not ambiguous. Then they went further to state that they have looked at the provision in question, and they actually said they have determined what a service apartment is. So having said we don't find it ambiguous, and having said that there is no actual definition, they then went on to say we are going to define it. So if it was not there, why then were you defining it? So they went ahead and defined it, and in short said that a service apartment is something which is halfway between a hotel and a residential property. Can you get something more ambiguous than that? So basically they're saying where there was no ambiguity, we have created it. Because what is halfway? Of course, halfway is 50%. So if it is 30%, 70%, can you define law in terms of percentages? Halfway between a hotel and a residential property is a service apartment. Does that make sense? So is a service apartment equivalent to a bed sitter or all these other concepts which are in between? You just say whatever is halfway is called a service apartment. So that's where we are coming from. And we say that to us was really a bad precedent. And that's why that decision is being appealed, because you cannot have that as a definition of a service apartment. Use this in the future. Get halfway between a hotel and a residential house, you have a service apartment. We find that wrong. Edwin, I rest my case.
Thank you very much, Mr. Birungi. I think it was very important to get that recite and that background. We can see Mr. Birungi is very passionate about his arguments, and we really hope the High Court will pay regard to your arguments and agree with you. But thank you very much for that recite. It sets the background for our discussion. So let me bring it over to Ms. Vanessa. Ms. Vanessa, Mr. Birungi just gave us a very good backdrop of where they were coming from, what the URA arguments were, but also now it's very important to get to just understand the tribunal. So just give us another feel of the tribunal. In your view, after reading the judgment, what did you pick of it? What was the tribunal saying in your own terms?
Thank you, Edwin. Thank you, Cephas. That was very insightful. So in the tribunal's ruling, they simply broke down the dispute into two issues. They needed to identify whether the supply that Sharad was making fell under the exempt regime or if it was a taxable supply. So when you look at the third schedule, it exempts the leasing or letting of immovable property, save for when you're leasing or letting serviced apartments. So drawing the distinction between what amounts to leasing and letting of immovable property and what amounts to a serviced apartment. So like Cephas clearly mentioned, there's no definition of what amounts to a serviced apartment, unfortunately. And case law has come over time to say when there's any ambiguity in the law, it should be interpreted in the favor of a taxpayer. But this wasn't done. They went and got the history of where VAT started from, being in France, yeah? So VAT was initially started in France, then subsequently went to the EU, and then they mentioned that the UK became a member of the EU, and that law was adopted by Uganda being, yeah. So for them, what they did, and they also did a locus visit and ascertained that these apartments had washing machines, they had DSTV, they had internet, they had a swimming pool, a gym, which ordinarily in our market is really not available to the ordinary traditional, quote unquote, rental apartments that people have. So let's say an ordinary person, me and you, go and rent an apartment in, let's say, Chisasi, Chanja. It's just an empty house, which I have to furnish. I have to put curtains, I have to put a bed, a mattress, and everything. When it comes to service apartments, in the mind of the tribunal, I'm assuming, was this is not a passive supply. In that, what they mean is, if I give you a room and say, pay, let's say 2 million averagely for this apartment. It has a kitchen, it has a bathroom, maybe a room, 2 rooms, yeah, and it's empty. You have to do is to furnish it. Yeah, vis-a-vis, I say, come and rent this apartment at $2,000, and what comes with it is a security guard, you have a gym, you have a pool, you have a washing machine, you have internet, you have someone to do your laundry. So in the tribunal's mind, these are value-added services that Sharad was offering to its tenants in the various properties it had, the units. It had penthouses, then there were simple 1-bedroom, 2-bedroom apartments. So for them, according to them, and also further, they went ahead to review the tenancy agreements. Now, fortunately for them, some of the clauses of the tenancy agreements actually mentioned that the rent included VAT. So there was one, the rent that had VAT, and secondly, there was a service charge, about $300, which the landlord specifically mentioned that it included VAT. So if I'm to put myself in the URA's shoes, I'd also beg to understand why you're collecting VAT and not remitting the same. Whereas the reasoning of the tribunal, when it comes to trying to define what amounts to a serviced apartment leaves a lot of discord in the industry, because now one begs to wonder, if I put a washing machine, will that make it a serviced apartment? Or if I put air conditioning, or how about if I leave it plain? But seeing how we are evolving as a human race, the things that people in the 19th century needed as part of their accommodation has changed over time. So yeah, those are my 2 cents on that.
Thank you very much, Vanessa. So suddenly we're seeing the debate around Sharad and service apartments. Never says it's still carrying on, and very, very pertinent ruling. It affected something that is very dear to us. Real estate is something that is very close to our hearts, and definitely it impacts the bigger economy. So I just want to come into someone who's in this industry, a leading industry player. So Mark, the debate is around service apartments, but I just want to broaden the discussion. So just paint for us a picture of the real estate business in Uganda. Is it really that significant that we should sit and discuss it? What's the significance of the real estate business?
So let's not talk about Uganda to start off. Let's just talk about the property business worldwide. The property business and property development forms the foundation of every economy throughout the world. It's what stimulates economic activity and property effectively across all genres of trade, whether it be industrial, retail, commercial, office space, etc., is the end user and the end point to trade. So without property development, etc., without property rights, what one is doing is one is stifling the economy and decimating the economy. So without property, where are we? We need somewhere to live, we need somewhere to work, we need somewhere to trade, we need somewhere to play. So the development of properties forms the foundation of any economy worldwide. You can't produce if you don't have a factory.
Thank you very much, Mark. That just confirms how pertinent this discussion should be. But Mark, you work with Knight Frank, and Knight Frank is a market leader. And recently, allow me just quote, you conducted research that led to the Kampala Property Market Performance Review, H2 2024. Those of us who have read the report, it's a very, very fundamental report. It speaks about the property market in Kampala. So Mark, could you just give us a few high-level insights into this report, particularly for Kampala? How is the market looking like?
Very difficult question to ask me with an overview of the entire property sector, but really without referring to notes, etc. But really, if one looks at the H2 report for the end of last year, what you're seeing in the office sector is quite a bit of cannibalization of market. You're seeing people moving out of the central business district areas into prime, newly developed space within suburbia. And when one says prime, newly developed space, as my learned colleague on the left-hand side here said earlier on, there's a transition in what people want and what people require. We're not still stuck in the dark ages. The same is happening with the office space. People are looking for office space that's a lot greener, more sustainable, significant parking, air-conditioned, etc., which is not necessarily how developments were originally developed 10, 20, 30, 40 years ago in central business districts. And it is too expensive to redevelop those properties. So developers are building in suburbia, giving the clientele what they're looking for in this day and age. So you're finding a cannibalization of the market. You're finding people moving out of the previously office commercial areas, and they're moving out into suburbia. You're seeing rentals of about $16.50 as a net average in those prime spaces. The previous space, which was now prime 2 decades ago, is now being classified as B and C grade space, and those rental levels are coming down. You're still seeing significant vacancy in those areas, and there is a concern going forward because there's quite a lot of office space coming onto the market from pipeline developments towards the end of this year, which will add another 120,000 square meters of space onto the market. And there's not a natural take-up of GDP growth sitting at 6.5% estimated for this year. You're not going to see that natural take-up. So there's a bit of a concern from the future of non-performing loans in that sector. Industrial is sitting at 80-odd% occupancy. at the end of last year, which is stable, but again, no growth in the take-up of space. There's a lot of impacts on that, UNBS, import duties, etc., that has stifled the economy. And if you go into your downtown area, you will see your downtown traders are sitting at a 30% vacancy in the CBD. That's having an impact because they're struggling to get their products into the country. So vacancies are erupting in retail there. You're seeing the new development of industrial warehouse space also happening in suburbia. So you're seeing a decentralization. You're seeing prime residential, not a lot of sales happening, not a lot of lettings happening. Vacancy has increased by 2% over the last half year of last year. I think we'll get to that in depth maybe a little bit later in the discussion, back to service departments. But the formalized retail sector is what is keeping the property industry in Kampala going at the moment. We've come through COVID. We came through the original Ebola scare. Fortunately, it looks like we've come through this Ebola scare of the last couple of weeks, but we're seeing a natural growth in the take-up of space. You've seen a 3% increase in occupancy in the formalized retail sector. A lot of that is also cannibalization with the movement out of the CBD, but a lot of international brands have entered the market. Retail rentals are growing, and it's also on the back of a transition of the local consumer. You know, we evolve, whether it's from what a home was 30 years ago, what an office was 30 years ago, or where we want to spend our money today. So people are looking at spending their money in more sort of what we refer to as retailtainment places, air-conditioned shopping centers where you have multiple different uses, from leisure to service to retail to fashion to convenience. And you're seeing the transition of that happening. But at the same stage, you're seeing a lot more of that developing out in the market. So if you go out to areas like Chanja, Nalia, etc., you're seeing a lot of smaller shopping centers being developed on the formalized sort of shopping center retail space, taking away from that sort of grudge outing into more of a leisure outing, which has impact on the majority of the major shopping centers, the traditional shopping centers that were built a decade ago or so in the market, seeing a decrease in footfall over the last half of last year, simply because of the competitive threat and changing consumer behavior. But the fortunate aspect on the back of that is we're seeing dwell times extend, dwell times how long people spend in the shopping center increasing. And we're also seeing phenomenal turnover growth. So people are coming to the centers less, spending longer time and spending more money. So retail has been the one that shone for the last half year of last year.
Thank you very much, Mark. Mark paints a very clear picture of what the market is looking out like. But I think if a deeper discussion on that, we shall have Mark come on later on. But let me bring it back to my learned colleagues over here. Mr. Birungi first. Mr. Birungi, after the tribunal's ruling, what should the people out there take note of in terms of implications? Can you just break it down for us? How is this ruling impacting the people out there? Lately, we've seen very many people opting to enter into this business. Someone has his one-bedroom house, he pimps it up and he's letting it out. He's going into service apartments. So what are some of those take-homes and what are some of the implications this ruling is having to the service apartment industry?
Thank you, Edwin. I think the first thing to understand is that for somebody going into business, the prime thing is to make money or break even. So you start with what is going to make me money. Is it putting the four walls together? Is it the location? Is it the things I put in the apartment? And therefore, whichever position I'm in, what is the tax implication? And it's important for one to understand that the tax implication is not simply VAT. We are now looking at VAT, but if you are the property owner, there are many other things you have to look at. You've got to look at your income tax, which could be corporation tax, which could be individual income tax. There is property rent, property rates. There is ground rent if it's applicable. So there are a number of things. So ultimately, when you are coming to look at your VAT for this discussion, you are like, if I'm going to charge VAT on these transactions, what will happen? Who are the likely people I'm going to have as my tenants? And when I charge them VAT, because there is a fridge, because there is a bed, how many of them are going to run away? So, should I long term be doing this because I'm thinking of tax or because I'm looking at making the best business decision for myself? So, when the government then changes my decision making by having an ambiguous provision, then that is distortional. That is what they call a disincentive for investment. In other words, when you look at this decision, on the face of it, it says, give the minimal service, then you are good. Give the minimal service, then you are good. Don't put in a fridge, don't put in a bed, but what still? We are not sure what you should not put in. What is the midway between a hotel and a residential house? If you are looking at me having a gate man at the premises and therefore I charge you a service charge, or I have a lift, you need to understand what a service charge is from the business concept. I don't believe that those who are analyzing this and concluding that because there is a word service charge actually understood. You see, when you have a block of apartments, these were 34 apartments, it means you have common areas which are for everybody. You have common security. You have a lift. So who bears the cost of the lift? You are telling the 34 tenants that whereas we are renting to you your own space, 100 square meters, there is another 20 square meters which is used by everybody. We don't know who will use it more, but we shall charge everybody a uniform price for that. That is what is called the service charge. And we went against URA about 18 years ago in the case of national housing for these crescent towers here. And the tribunal said this service charge is not taxable on the person. This is a separate charge, but it's not part of the rent. You are charging this person, you have your 50 meters. You can't be considered in the same way. It's the way like you have a condominium law. It has to provide for the common areas. So when you have a law which is not progressive and doesn't look at all these factors, it is keeping you in the Stone Age. You must have a law which is progressive, which is understanding all these challenges. So it means you are encouraging your investors to have a Stone Age mind of saying, I have 4 walls, I don't care. Then you get somebody else asking for all these improvements and say, oh no, that one is chargeable to VAT. Then everybody goes away. Then that's how you find that the whole economy, people are backward. Because if everybody thought, oh, it is actually much easier, cheaper to move on a border than a car. You can actually convince everybody, isn't it? If everybody had the border, we would all save money, isn't it? Is that what we want? So you are saying, oh, if you have a border, you actually pay less for fuel. There is less tax on fuel to a border. If you have a car, you pay more. That's the kind of disincentive, indirect as it is. That's how it happens. But more still, you should have a law which is, the blame is not merely on the tribunal, and actually not so much, maybe 20% because of the way they got around it. It should be the Ministry of Finance, the policy makers, to stop having these ambiguous provisions. And when you look at the law, when they amended it and tried to separate commercial premises from long lease, short lease, and then had some ambiguous thing called service apartments, they should have gone way beyond that and defined what the service apartments are. When you look at the EU law, which they are referring to, in the UK, they actually then go to how long are those premises used for. So if they should have gone beyond and said, in actual fact, when they are taxing service apartments in the UK, are they merely talking of passive income? Is that what they defined it? Or they actually went ahead and said, these are the parameters. How long, what type, how do you charge this person? But the underlying principle is residence. There is a difference between operating to accommodate for residence and operating for commerce. That's why you call it a value add. You normally want to transfer it to somebody who will also transform it into another process. When you find that this is an end user most of the time, then you don't charge it. That's why you find you are not charging tax on food, you are not charging tax on the residential because this is an end user. Now, you understand that this consumer of a service apartment is an end user. He's there for 12 months. He's the same as somebody who is in an empty house in Kororo. So what if you were just like they did, if you are just saying the one who charges most should pay tax, you could as well say all houses in Kororo pay VAT. All houses in Kawempe don't pay VAT because we know you get little money. That you could as well have done that because that's what it is effectively doing.
Thank you very much, Mr. Birungi. Mr. Birungi raises very pertinent and even policy considerations of the Ministry of Finance. These are pertinent issues he raises. Let's reconsider the policy perspective behind some of these tax provisions that we have. So let me bring it to my colleague, Vanessa. Vanessa, you've heard Mr. Birungi raising very, very pertinent issues around policy, and also he makes a very interesting argument. Let's consider the intent of the business people, the likes of Mark. Let's pay regard to how they're doing it, then the tax should follow through. So let me bring it to you. What are your implications? What are some of the implications you're discerning from this ruling? What should players in this industry, in this market, look out for in light of the Sharad Karia ruling?
Thank you, Edwin. So we're continuously seeing people getting into the business of Airbnb lately. And it's a growing passive income that people have been, quote unquote, been calling a passive income, but clearly the tribunal has proved them otherwise. So number one, what I see are three stakeholders in this. One being the operators of these businesses, having the need to, one, register for VAT, of course, with the different considerations like the threshold, 150 million a year, they have that obligation to register, file, and charge that VAT. The other stakeholder I see would be the consumer, the person who comes to rent that property, a service apartment, an Airbnb. The cost is definitely going to go up for those who have not been charging the VAT. And that, of course, takes a pinch on the market. When someone was expecting, I'm going to make, let's say, $200 off a night. Now it's going to have to be 200, let's say, an extra amount of money, yeah? That would mean the landlords are not going to get as many clients as they are because people are not willing to take on that cost. Then obviously the third stakeholder I would see would be the URA, definitely meeting its targets herein. Whereas the law has been there are different issues. How the law is quite ambiguous in defining what amounts to serviced apartments. But as it stands, as the ruling stands, until it's overturned, when my colleague here, Cephas, gets a favorable judgment.
In the Supreme Court.
So, and as and when he gets a judgment, they are going to have to collect that tax. Yeah. So for me, the key point, the key takeaway is register, understand what taxes are supposed to be paid, rental income, VAT, and comply to avoid penalties. Yeah.
Thank you very much, Vanessa. Those are equally pertinent recommendations and implications to the general situation out there. Thank you very much. Let me bring it to Mark. Mark, just paint for us a picture of the practicality and give us a business feel of how is the market playing like in light of the Sharad ruling. How has it impacted business?
Oh, sure. I could sit here and speak for a day or two regarding that. But let's just go back a little bit when we talk about the tax regime in property. When the developer develops his construction cost, VAT is payable on all the input materials. But that VAT cannot be claimed back. So immediately, property development in the Ugandan market is 18% more expensive than anywhere else. Then you start operating. When you start operating, you have ground rent, if it's applicable. You have property taxes. Now, property taxes are calculated on 6% of your rental income. You then have your corporate tax, which is calculated at 30% with a tax deductible allowance of 50% for expenses, to a maximum of 50%. So effectively, the regime, the tax regime, has placed a 15% turnover tax on rental income. So 18% VAT on input costs, which is not claimable. 15% turnover tax, which is a corporate tax. 6% of your rental income as a property tax. When you start adding that up, a property sector shows a 10, 11, 12% return in year one at best on a fully let property. But your tax regime is running at 30 or 40%. I know there's a discussion that's going on at the moment, which my dear friend on the left here is involved with, that property rates and the way it's calculated in the Ugandan sector is a double taxation, because you're already taxing the income as a corporate tax. Now you're taxing the income again as property tax. The property industry has been seen by the government as the golden goose, and it's being overcooked and destroyed. Look at the skyline. You look at somewhere like Upper Hill in Nairobi. There are more cranes on Upper Hill as we stand today than there are in the whole of Uganda. Development is flourishing. Remember, property development is the cornerstone, the foundation of your economy. Have a look at Kampala. 3, 4 cranes, of which 2 are government developing for themselves. It's not viable at the moment to develop. Now let's go back to this ruling on the service department. Okay, it's the end consumer who has to pay it. Now the consumer can only afford a certain amount. Now he's got to pay that additional 18%. Okay, already the reason you've had the transition to short-term lettings and Airbnb is not because the investors go into that market with that as a vision. It has become a necessity, simply because there's not the natural take-up of space, because our economy is not growing at that pace. So to try and generate cash flows, people are looking at, it's better to rent out your property 4 days a month than have it vacant for the entire month. Those long-term lettings are not there. So they've moved into the short stay aspect, or the adding value. Because remember that transition, and how far do we go back? You go back 40 years ago, what was a residential home that you were letting out in terms of the law as immovable property? It was 4 walls and a roof. It then transitioned to electricity being added, then a water heater, which is a movable appendage. So are we saying that if you have a water heater, it's now a service department? No, we're not saying that. And I'm sure the tax tribunal is not saying that, because there's been a progression. But the way they've written this ruling, it could very well, URA could come back and say, sorry, you have a water heater, so it's now a service department. So the transition, today we live in a world of connectivity, okay? It's a basic human need to have an internet connection. It's part of the education process, it's part of all of this, etc. today. So now we're saying if you have an internet connection, it's a service department, you must add an 18% VAT on. It is going to destroy, okay, the industry from an investment point of view, because investors now sit with 2 things. What do? Do we go back to the dark ages and just build 4 walls and a roof to try and make things economically viable? Or alternatively, do we find different mechanisms? Now, when you go back to the service charge itself, as was discussed earlier on, is for common area maintenance, or is it for added value services? So now you start creating 2 different agreements possibly, one for rental and one for the added value, so that you're reducing the VAT on that. But at the end of the day, you're also reducing the income then. So you're reducing the tax, the corporate tax that you'll pay. So it's nonsensical implications that are moving forward, and as was said earlier, to try and take us back to the dark ages. It is problematic for the industry, and it's going to change the industry for the worse.
Thank you very much, Mark. Mark paints a very faint picture. Certainly, the ruling has ramifications that will distort the market, affect the market. But ladies and gentlemen, such a discussion is always very imperative. Yes, we've discussed and digressed the problem. It's very imperative of us also to suggest solutions. How do you make things better? So I just want to pick your rich mind. What is the way forward? What are some of those policy considerations we can put forward? We can be speaking to the Ministry of Finance, the Uganda Revenue Authority, the lawmakers, all those things. So I want to give an opportunity to speak to them. What are some of the suggestions we can make around policy reforms, any recommendations in light of this ruling? And they could be broad enough to affect and impact the entire market. So I'll use the very format we're in. So Mr. Birungi, you'll go first.
Thank you, Edwin. I think I've already mentioned part of what I think should be done. There should be a reform in this area. That paragraph which gives the exception to the rental, to the immovable property, needs to be reviewed entirely, because you see, like I said before, the main thing is immovable property. So are you going to say, if I give you 4 walls, the main thing is the immovable property. So these other things are put in, fridges and whatever, what component are they of this whole price? If you look at, if you take an example of dealers in the petroleum industry, petrol stations, they make supplies of things which are largely exempt, the fuel, but they also have others which are taxable, what are called the lubes, the oils. So the law envisages such a situation. You are making what is called a mixed supply. So in that mixed supply, they then say, give an apportionment of what is exempt and what is standard rated. And then you have a formula and you pay the proportional tax. That's one way of looking at it. That's exactly what is happening also for hotels upcountry outside Kampala, which are exempt from VAT on accommodation. So for some time now, the hotels upcountry, because they are considered to be struggling, they were exempted on the portion of accommodation. So you pay tax on the food, you are exempted on the residential accommodation. But the EFRI system has an inbuilt system to apportion also your expenses. So I can see the necessity for going that deep for an area like this. I think the people in tax policy have enough time and capacity to write down things which make sense, which make business sense after consulting, and find that they remove as much ambiguity as possible. So much as you talk about, as we are saying now, when you list 30 things and say, when these are there, then you have a service apartment. We are saying, so does it mean if I remove 15 of them, then it's no longer a service apartment? Be more specific and indicate what qualifies, and look also at the possibility of the abuse when you make so much tax planning possible from both sides. How much are you going to police apartments and go to each of them and count how many spoons are there for it to be a service apartment? So I think this area needs some much deeper input. The tax practitioners have the right to make practice notices, which can be used, which can advise everybody about where they are going. And most of these countries which are progressive, they create transitional provisions and say, yes, between now and this time, this is what we are going to do. Prepare yourself. But when the whole idea is like, we shall catch you by surprise, that's the better way to get the tax. I think that's not a good way to go.
Thank you very much, Mr. Birungi. Those are very, very important recommendations. We've taken keen note of. We shall deduce them, and certainly we shall write to the powers that be. At least we shall initiate the process around reform, because we believe it's a very fundamental sector. So let me come over to my colleague, Vanessa. Vanessa, you're speaking to an Airbnb owner you're speaking to Mark, who's in the market, you're speaking to the Uganda Revenue Authority, the lawmakers, the ministry. What are you telling them in terms of reform? What are the areas we can make better in light of this ruling?
So my proposal would be sectoral growth. Yeah, like Mark mentioned, this is a very pertinent sector for our economy. Currently, we are a developing country. Let the sector grow. Give it time. Provide incentives. I know we have incentives for hotels, yeah, but extend that incentive towards these businesses to allow them to grow and thrive. Because whereas we are trying to collect revenue, yeah, we are killing the little hope that we have. If the sector has not grown to a stage that it can be self-sustainable and we are killing it at a very young stage, then it's really pointless. So my proposal would be allow the sector to grow. Like my colleague said, give it a timeline. Say maybe 10, 15 years, our economy would have grown. Our real estate sector would have grown compared to our neighbor there, Kenya. The real estate market is really big, yeah? And there's so many benefits that has come from that. There's so many investors that are coming in, so many multinational entities setting up headquarters there because they've allowed the sector to grow. So my proposal would be, let us allow the sector grow, provide incentives, let businesses thrive, yeah? Then secondly, make the legislation clearer. If there's an ambiguity, provide a practice note for it. Let people understand. Like you mentioned, if the ruling has listed AC, DSTV, a bed, a mattress, spoons, forks, yeah, where do we draw the line? A normal person out there will say, okay, so if I don't have the things listed in the ruling, it won't be a service department. It's not clear. So people don't know whether they should go right or left. So it's a catch-22. If they catch me, well and good. If they don't, well. So which leaves a lot of confusion within the market. So those would be my proposals.
Thank you very much, Vanessa. What I'm getting from Vanessa and Mr. Birungi is the lawmakers, you have an opportunity to make reform. But the URA, Uganda Revenue Authority, you equally have an opportunity through a practice note to clarify and solve this ambiguity that has been manifested out of it. Let me come to my good friend, Mark. Mark, you are in the business, yeah? What are some of those reforms you'd like as the industry players?
So we talk about affordable housing. Okay. We talk about the housing shortage that we have in Uganda. Uganda's got 2.5 million housing shortage currently as we stand, and that's growing at 100 to 200,000 homes per year. What tax incentives do we have to develop affordable housing? You look at an economy like Kenya, they have a housing deficit of 2 million. That has not grown in the last 16, 17 years, simply because the natural growth has been accommodated by the affordable housing that is being developed. And why is it being developed? Because government gives tax incentives to build homes. Government has saving schemes that they've introduced for people to buy, rent to buy. What are we doing in Uganda other than putting tax after tax after tax onto the property sector? I want to read a quote, if you don't mind, from Edward Kieswetter, who is the commissioner of the South African Revenue Service, in a speech that he gave to the G20 just last week, where he said bolstering tax collection capacity is far more effective than in increasing revenue than simply raising taxes. And we seem to have an issue where the tax regime has looked at this aspect to say landlords are the wealthy people, and we just need to tax and overtax and overtax. There is no incentive to develop, as we mentioned in the analogy earlier on. So you'd like to see more tax incentives. Housing, irrespective of what you want to call it, whether it be serviced, whether it be long-term, etc., does not need to be VATable. Short-term, without a doubt, it's a different market. Short-term needs to be VATable. But long-term housing, irrespective if it's in the low end of the market or if it's at the high end of the market, should not incur VAT, because that is the end user, consumer, that is where they are living over a long period of time. And I'll just throw one to my learned colleagues. Student accommodation, hostels are provided a bed. As per the tribunal, is that now not VAT-able?
Service apartment.
Service apartment.
Yes.
I mean, it's crazy. I'm sorry,
Yeah,
just to raise
exactly.
that.
Thank you very much, Mark. And I want to equally applaud and thank all our dear panelists. The discussion on service apartments, Sharad ruling never ceases. It's carrying on. We shall carry the debate, but certainly we are making impact. We hope our discussion and our current discussion will generate reforms that will better the industry, will improve the economy. So our discussion will be closing over here, but just before we close, I want to equally applaud all our partners who have joined us for episode 1. Most importantly, Mr. Birungi Cephas, we're always very honored. You're always very, very kind enough to share your vast knowledge and experience in tax matters. Mr. Cephas Birungi from Birungi Barata and Associates, we're very honored to have you on episode 1 of the Tax Hub podcast. To my colleague over there, Mrs. Vanessa Irene Bekeka Muneza, we're equally very honored to have you on episode 1 of the Tax Hub podcast. Your discussions and insights have been very, very, very pertinent. We are very honored. And Vanessa comes from AF Mpanga Advocates. We're equally very, very honored to have you. And to my good friend Mark over there, Mark, we're very, very honored. You've given us a very practical feel. You've painted for us the market. That's very, very important. And we believe your insights equally will come very, very handy in shaping policy, making improvements, and bettering the industry. So very honored to have Mark. Mark is from Knight Frank. We're equally very, very honored. All right. Episode 1 of the Tax Hub podcast has been hosted at Onomo Hotel. We're equally very grateful to our partner, Onomo Hotel. We're very, very grateful for hosting the Tax Hub podcast, and we look forward to bigger, impactful, and pertinent deliberations. Ladies and gentlemen, episode 2 of the Tax Hub podcast is in the offing. Look out for it. Follow us on our YouTube channel. Hit that like button. Hit the notification button. These are the discussions we're going to be having. Very pertinent, very practical. But most importantly, our discussion should generate debate, how to make the practice, the industry, and the market better. Thank you all for tuning in. We're very honored to have you, and see you at episode 2.